Welcome to this new episode of Your Next Trade. Today it's going to be S&P 500, 4000, a magnet. So what we've seen over these last few days, over this week, is the S&P, the equity market, most of the stocks have been pinned around the 4000 for the S&P. Why? Because we had the option expiry yesterday, which very often we're going to be looking at the biggest open interest to close the open positions that were built during the last few weeks and months, and that was the case for this week. So if we look at the week-to-date asset performances, the way we start as always, most of the assets which are here have been trading in a range between 1 to 2%. So the S&P was down 0.7% on the week, Nasdaq a bit more, 1.6%. In Europe, we had roughly the same picture with down, up 1.5%. But overall, if you look at stocks in blue, if you look in purple about FX, the trading ranges have been around 1 to 2%. So we had a week of consolidation, not the same case if you look at commodities. So if you look at commodities, if you look at WTI, so a very rough week for the oil market, being down 10%. Yesterday we had a bit of a sell-off in the afternoon. Copper as well, down 7%. On the other end of the spectrum, we get natural gas up 7% in the US and more than 18% in Europe. So if we look at commodities through the WTI and copper, there is clearly worries from the market that the world is even more slowing. You remember last weekend we discussed China potentially reopening, so there was a lot of headlines about China targeting special COVID monitoring, and it feels very much like the world is slowing even more, and that explains the weaknesses in the commodity space. Now let's look at the week-to-date industries performances, where here we get the S&P, so slightly down for the week, but as you can see, many industries were down more than the S&P. And actually, if you look at the picture of the biggest losers of the week, interestingly, those losers were the winners of the past months or the past 3 months. So what has been happening is pretty much normal in the situation. After a big rally on the S&P, we moved from 3,600 to 4,000, so more than 10% move, and we had a bit of digestion from markets and a small reversion to the mean. So again, the losers of this week were the big winners that we had before. For some of the winners, we get solar, we get some of the tech, food, beverages, and as well the bond market. Looking at rates now. First, looking at the US 10 years. So now the US 10 years closed yesterday at 3.8%. So coming from very high level. So it was not updated in that chart, but we are close to that level. So week to date, not much of a move, similar to the equity space. We have been trading into lower trading range. So the realized volatility across asset classes has been coming down massively. The ranges of trading have been coming down. But on the picture of the yield curve, which is, as you know now, a very good indicator of potential recession coming, we are now trading at minus 70 bips between the 10 years and the 2 years. So the trend is still the same. We are coming lower. What is interesting, if you look at the commitment of traders that came out yesterday, Friday, looking at the positioning out of Tuesday, the positioning short 2 years is at all-time high. So market participants have been very short the US 2 years, and they have been increasing their positioning. So there is a build-up for an extreme position. Now looking at the Fed expectation through the euro dollar, where the terminal rate is very much between March and June. The picture has not been changing much between last week and as of Friday, a bit of a change by 20 bips, or so the differential between 1 week to another is around 125 bips rate hike more. Around now into the volatility with the VIX, so VIX now at 23%, so VIX has been coming quite a lot down since the highs. You need to put into perspective what is the average of the VIX over time since 1990 is around 19%. So we are trading above the average. The good thing with, as I said last week, with the VIX coming down is the premium that is implied, obviously, from the options is lower. So it makes the structuring trades through options much easier than it was a month ago. The VIX term structure very much like it was before, so not much to say here. So quickly, let's look at the technical analysis, and here I've been putting weekly charts. Why I've been doing so is to give you a bit more understanding of how the trending range have been. So if you look at this candle stick here, we are calling this a doji. Why? Because the body, so the open and the close are more or less at the same level. So there is a bit of indecision now these days between the bulls and the bears in the market, which is very easy to understand by the fact that, as I said, we moved up by more than 10%. So we had a massive bear rally across asset classes. Now there is a bit of digestion before the next catalyst, and as I said last week, we don't have that much of a catalyst before the end of this month with the PCE, with the inflation, with actually the Fed Powell on the 30th talking, and with the FOMC meeting as well that will be in December. So market is the trading range have been much smaller. And that is true as well if you look at the Nasdaq, where you do have like a bit of a doji. If you look at the Russell, similar. So we are consolidating. The DAX has been stronger. So Europe, as I said, has been a bit stronger, helping by I don't know what exactly. So I think the flows have been helping for emerging market. Still indecision, a bit of consolidation at this level. SOX is exactly the same, so you no need to take too much time. XRT for retail that we discussed previously. So you see between the end of the week and the start of the week, despite a bit of a move, a smaller range, we end up at the same level. Euro dollar, same. We closed at the same level as last week. Dollar yen, a bit more reversion to the mean for the dollar yen. And now, more interestingly, I want to be looking at copper because copper has been weak for the last 5 sessions. So we almost gave up 50% of the move of the 2 previous weeks. Why? Because again, there was first the rally across asset classes, which was even more true for the copper based on the expectations that China will be reopening. I think the Chinese reopen will be taking more time than what the market could have been hoping even a week ago, that the Chinese number, the macro numbers are not that great. So we have the confirmation here with the Dr. Copper, which gave a bit back, and actually the CL1. So here we are looking at WTI, which is making 6 weeks lows. So we had the change of the contract. So we are now being trading the January contract since Thursday, if you've been trading. But yesterday, really weaknesses. What is interesting, I think, and that could be your next trade, is so far XLE, which stands for the ETF for the oil sector, has been pretty strong, not coming down that much. So here we get the XLE versus the SPY. But if I put you the chart of the XLE has been holding very well, despite WTI at very low level, both on the monthly, on the quarterly, on the year level. So I will be definitely checking the big names that are making the XLE. We can be looking at some, for instance, and how they are behaving, because there is risk now that this XLE could see some weakness in the next few weeks. Now let's go back into the Excel spreadsheet, looking at what happened this week. So as we discussed, that was an OPEX week, so option expiry. For those of you who are new, the market for stocks has been very much driven more and more by options, and every month we get, on the third Friday of each month, we get what we call the OPEX, which is the option expiry. You're going to have a quarterly expiry as well, and the market is more and more driven by how the market is positioned, or the market participants have been long or short through options. And we'll be looking at the option interest on the S&P, on the SPY, and that was very true for the 4,000 level on the S&P, which is here, where the market on the open on Friday gets literally magneted from this 4,000 level. And over the last 5 days, we have been hovering plus 1%, minus 1.52% around this 4,000. So now, starting on Monday, we're going to have a reset of this OPEX. So the question has been really much, is the consolidation over after this big move? And with any consolidation, you'll be looking, are you going to go this way, or are you going to go this way? Meaning up or down. So far, if you look at the momentum trades through the CTAs, if you look at their positioning, they have been reducing their exposure in dollar yen, in euro, in most their assets that we're trading so far. So a bit of reducing of the position, but not completely. So they probably reduced their exposure by 20 to 30%. So far, CTAs are still positioned for the market the way they have been up until today. If we look now at the retail sales, if you look at the US consumer, something that we covered over the last weekend. So US retail sales were good month on month, year on year. If we look at the specific at the single names, Walmart came with good numbers, Target with not so good numbers, Foot Locker had some good earnings. What is interesting is all of those names are sitting on big inventories, meaning that the Thanksgiving, the Black Friday, the Cyber Monday are going to be very active, and you're going to see many big discounts in the US and in Europe, because those retailers are sitting on huge inventories. But interestingly, again, the US consumer is very resilient, and keep in mind that the US consumer is making 70 to 80% of the US GDP. So far it has been holding very, very well. If you look now at the WTI, if you look at the future contracts, so here this is the picture for the future contracts. As you can see, we are in backwardation going forward, but we are flattish to almost contango for the next 6 months. So in other words, I think the market is a bit in oversupply 3 to 6 months, which again tells me that there is a potential good trade in going into the XLE and some of the name of the XLE. In terms of the inflows that we've seen in the market, we have seen a lot of net inflows. So the SPY for the week, we have seen 5 billion, same with the QQQ at 2.5 billion. So a lot of money going into the market, which explains as well the strength of the equity market. So what about next week? Finally, something that I discussed here, which is the true range of the S&P future over the last 3 months. So that's the daily. As you can see, we are going from the high 5% that we had with high volatility, and for the week actually we have been below the 2%. So the trading range of the S&P daily, or in other words, the realized volatility have been coming down a lot. Okay, so that's true for most asset classes. So we went from very high volatility in September, even October, and now it is coming largely. So again, the market is waiting for a new catalyst Unfortunately, for next week, what we have is Thanksgiving on Thursday in the US, so the US market will be closed. Only half a day in the US on Friday, but most of the time, what you're gonna have is Americans will be taking 5 days off. And the market will be very, very quiet. So in terms of catalysts, we do have like the flash PMIs on Wednesday. Interesting to see how the momentum is after the flash PMIs kind of staying at the same level the months before. We'll see how the picture is unfolding. On Wednesday as well, at 7 p.m. UK, we get the FOMC meeting minutes from the last meeting. That's going to give us a bit more color about the inflation and what are the Fed expectations. For the Swedish market, the risk bank expectations on Thursday, so that will be for Europe. Other than that, market will be very quiet this week. Normally, you're going to have lower volume. That is even more true with the Football World Cup starting tomorrow. So in terms of drivers, flash PMIs, I will be looking as well at Deere on Tuesday with their earnings. Why Deere? Because Deere is a good indicator about the macroeconomy. And if you are looking like with Caterpillar, they will give you how the macroeconomy is unfolding. They will give you predictions. So always interesting to be looking in details into the Deere numbers. Other than that, if you look at what the market is pricing, so we just saw that realized volatility has been coming down. What about the market? What is the market pricing? If you look at the straddle at the close on Friday for the at-the-money S&P, we were pricing a 1.8% move on the S&P. So how does it compare with the S&P behaving around this Thanksgiving week? So week on week, from the Friday to Friday on the Thanksgiving week, on average, the S&P has been moving by 0.7%. Last week was mostly a bad week due to the Friday. So for those who have been trading, like me, Friday last year, on very low volume, the market went down minus 0.3% on that day. Other than that, on the Wednesday, what you have very often is a quiet day, not much happening. If you look at the last time it moved more than 50 bips was in 2011. And the week after, you do have a positive week very often. So week after Thanksgiving, positive week. For this week, I mean, there is no guarantee to that, okay? What we've seen so far is over the last 20 years is on average gain around 0.6 to 0.7%. Last year was quite painful on the Friday, and Wednesday could be borrowing, but as you see here, you do have like some catalyst on Wednesday. We get the flash PMIs and we get the FOMC meeting minutes. So not many drivers. A bit of the earnings season is over now. You do have like a few names, some big names, but it's almost over. Not that many Fed speakers. So volume will be going lower, and we are all expecting the fight to come back in 10 days time. So that doesn't mean that you can't be making money, and this week has been a good example, but less catalyst. So if you're looking to do more fundamental analysis than usual, if you are looking to build more spreadsheets, those are the good weeks to do it. And as well, if you're in the US, obviously you can spend time with your family. So this is it for today. Just to give you a bit of color, I offer a 25% discount until the end of December 2022 for the 4x4 video series, both on the 2 months access or the 12 months access. So you can be using a coupon holiday25. If you got any questions about the video series, about the mentoring, about joining the community, so we get more and more people joining us on the Discord community, feel free to reach me. And if you are in the US, have a good Thanksgiving and have a good week of trading. All the best. Bye bye.